Hey, rich friends, it's your girl Cha Cha reporting live from the Money Mantra, and we are back with another Forex education video. I created this channel to help people just like you become independent and profitable traders, no matter which market you decide to trade in. If this is your first time on my channel, I want to give you a warm welcome and thank you for deciding to spend time with me today. If you make it to the end of this video and you find that it's helpful, please don't forget to subscribe to the channel so that you can get more content just like this. If you are a returning viewer or subscriber, welcome back to the channel. You guys already know what's going on. I appreciate all of the likes, shares, comments, and subscriptions that you've given to the channel this year because it has helped us grow. And hopefully you guys are putting this information into practice and actually making money in the market. Now, in today's quick video, we're going to be talking about how to identify key levels when it comes to trading currency pairs. Now, no matter what you decide to trade, understanding market structure and key levels is going to be something that will help you along your journey because these levels are essentially what become your entry points, exit points, take profits, and stop losses. And it's pretty simple. You don't even need to have a paid subscription on TradingView to execute this or to be a profitable trader. So the first thing we need to understand is that the market is always going to be going up and down. Sometimes it's quite obvious that it's a downtrend because the market is continuously going down. Sometimes it is an obvious uptrend because the market is obviously going higher and higher. And we can tell this by the shape. It's just like being on an escalator. You know when you're going on an up escalator versus going on a down escalator. And then you also know when you're at the airport and the escalator isn't going up or down, it's actually just moving sideways. So these are the main ways that the market can move. And it's up to you to determine when you're going to get in to take advantage of the market movement. Now, I prefer to trade in trending markets. For example, if I'm in for a buy here, I would like the market to continue creating highs. If I'm in for a sell here, I would like for the market to continue creating lows. But unfortunately for me, the market doesn't really care what I want. It's going to do what it wants to do. So me being able to identify these levels will help me find a better entry instead of trying to dictate what the market is actually going to do. So the first thing we're going to do is use the circle tool. You can use a circle, you can use a rectangle, you can even use a smiley face. It's completely up to you. But you want to highlight these areas that your eyes are automatically drawn to. And these are areas where you can see the market had some type of strong reaction. Now, if you guys can understand why I'm putting the circles in these particular areas, just go ahead and drop a 7 down below in the chat box to let me know that you are following along. Now, these are areas where I can see the market clearly came to a point and then the trend was reversed. So I can see that that's happened multiple times. And this is something that's going to continue to happen all throughout the market. So once you can identify those key levels, you're already halfway through finding your entry and exit points. Now, the circles are those focal points that your eyes just go to. But next, I'm going to get a horizontal line, which is also a free tool, and I'm going to put it on these levels so that I can see it all the way across my screen. And then I can see that the market hit this level 1, 2, 3, multiple times, making that a significant level of support. Now, key levels are important areas in the market. Areas of support are where you typically buy, and areas of resistance are where you typically sell. So we can see that that was a strong area of support because more than once the market hit that area and actually had a strong buying reaction. Now I'm going to do the same thing and I'm going to put more horizontal lines where I can see the market had a strong reaction. We can see it bought here, making this another strong area of support. We can also see that the market sold at this place before. So it was a support area previously, and it was also a resistance area previously, making it a key level or something that we really want to pay attention to. So you can put as many or as little all of these lines on your chart as possible because it's going to help you know if the market had a strong reaction at that area before, and is it likely that the market is going to have a strong reaction in that area again. So let's put the chart in replay mode and we're going to focus on this key level here. Now we can see that in the past, the market had reached this level, right? It created a new high. The market came back down. It bought at the same level multiple times. It got up almost to the same high. It came back down. It bought at the same level. It sold at the same level. So we can see a pattern that has been created based on these circles and lines that we've put. So if we were to enter this trade for a sell, simply because it rejected off of the same resistance area, we know that our take profit should be at the next support, right? Because if the market is going to repeat itself and go down to the same level, we should be looking here for TP1, we should be looking here for TP2, and we should be looking here for TP3 or any previous lows simply because it is a sell. And you would want to put your stop loss at a previous high. So let's just go ahead and put our stop loss here. We're going to turn this line red and we're going to turn these lines blue to say that they are places where we could potentially take profit in the market. Now, I hope you guys are following along. All we did was identify key levels from the past, add some horizontal lines to give us even more place to look for our support and resistance, and then we're going to target those previous areas for our profit. Now, we haven't added any indicators yet. This is a strategy you can do without indicators, but it is more so about understanding market structure and market movement. Now, let's go ahead and see what happens. Now, we can see that TP1 and TP2 were hit, and the market respected those levels. We can see that it even came down to TP3 as well. Now, although this may have took some time, the main thing that you had to do was wait. So in about 3 days, you could have secured 150 pips. Now imagine if you were using $1 as a risk in your trade, that would have been $156.50. Imagine if you were using $2 in your trades, that would have been over $300 that you would have made simply from paying attention to key levels and respecting market structure. Now, the cool thing is that when this market does go back up, say for example, you got in for a buy at this previous key level, you know that your take profit is just going to be targeting a previous high. So it is important to take a little bit of time to mark up your charts and figure out what areas are you trying to target, and then use your indicators and other things to confirm the trend so you can figure out if you're buying and selling and where could the market go. Now, even if we scroll back to the past on an area of the chart that I did not mark up, we can see how the market still respected these levels, right? This is all the way back on December 12th, which was about 6 days ago. We can see that the market continued to respect the same levels. And we can go back even further, right? This was on November 27th. And then our previous area of support was resistance. It became an area of support, and so on and so forth. So if you made it to the end of this video, I do just want to remind you to subscribe to the channel. I drop short videos like this all the time to help you become a better trader. And in the last couple of months, I've had about 70% of viewers who were not subscribed, but you subscribing actually helps the channel grow. It pushes the content out into the algorithm, and it helps other traders just like you get this type of information and level up in their trading game. So again, if it was helpful, stick around. I would love to have you here. If you guys have any more questions, you can drop them down below in the description box. If you are interested in registering for personal mentorship or joining my online course, that information is also down below. But that's really all I have for you guys today. Until next time, rich friends.